Hi guys, I hope that you're all doing well. In today's lesson, we'll do inventory for grade 12s, and this is part of paper 2. Okay, so I know that inventory is a topic that has a lot of subtopics. However, I tried making sure that I make a list of everything so that you guys are fully prepared for the topic. So in inventory, you have to be able to explain the perpetual inventory, to explain the periodic inventory, to calculate the FIFO, to calculate the weighted average, to calculate the cost of sales, to calculate the gross profit, to calculate the markup percentage, to calculate the gross profit percentage, to calculate the inventory turnover, to calculate the inventory shortages, to explain internal controls, to analyze inventory performance, and to advise business owners. You guys most probably see this video on the 16th of June or in June, which means it's term 2, and you've definitely seen inventory before. So you're most probably familiar with some of these subtopics. If you're unfamiliar with them, that's okay. We'll do all of them in the next lesson. For now, I just want you guys to be fully prepared for the topic, because I know that in class, when a teacher introduces this topic, they'll most probably give you different activities, and you won't manage to be able to track every single thing that's under inventory. So these are all the subtopics. However, under, for example, perpetual inventory, you know that there are obviously certain points that you need to know. So even though inventory has a lot of calculations, you can get some points by mastering the theory part. For example, if you can explain the perpetual or periodic inventory, and sometimes besides calculating the FIFO, they might give you a question that requires you to explain. So I prepared a checklist that helps you to track how far you are in terms of mastering inventory. So we'll go through this document, and as time goes on, we'll come back here and see how far we are with the topics. So I think that in about 3 hours, you should be able to explain different terms as well as mastering different calculations, but you obviously have to practice more in order to ensure that you remember everything that you've learned so that you can be fully prepared for your exam. So if you want to have access to this checklist, please send us an email or drop us a WhatsApp text. More information will be in the description. Now let's start by defining inventory. Inventory are goods that are bought in order to be resold at a profit. That is most probably what the textbook says. When I explain certain topics or subtopics, I'll give you guys the textbook answer, and I'll try to explain it in simple terms. So if you don't know what that means, that's okay. What you should basically know is that inventory is everything that a business buys to sell again in order to make a profit. For example, a clothing shop's clothes, or a supermarket's groceries, or a furniture store's furniture. They buy all those items, then they resell them in order to make a profit. So what you should know is that inventory is a current asset simply because it's expected to be sold within 1 year. Now, there are two kinds of inventory systems. There's the perpetual inventory system and the periodic inventory system. So in terms of the perpetual inventory system, your textbook might say that entries are made in a balance sheet account called trading stock, which is an asset account, every time goods are bought and sold. And cost of sales needs to be calculated and recorded every time goods are sold. When stock is purchased, the trading stock is debited with the cost price, and asset is increasing. When stock is sold, the trading stock account is credited with the cost price, the asset is decreasing. And lastly, any additional costs on purchasing stock is debited to the trading stock account, for example, carriage on purchases. This system is better for internal control of inventory. So you guys probably don't even understand what most of that information means, but that's okay. I'm here to teach you guys. So the perpetual inventory system is basically a system where inventory records are updated every time inventory is bought or sold. So a business always knows how much inventory it has, the value of inventory, as well as the cost of sales. So how does the perpetual inventory work? For example, if a store has, let's say, 100 shirts and it sells 10 shirts, okay, the reason I subtracted 10 is because they sold them, therefore they are losing some of their shirts. So to calculate this, we'll say 100 minus 10, that means there are 90 shirts that are remaining. So what are the advantages of the perpetual inventory system? Number one, inventory levels are always known because they always calculate every time they sell something, right? Secondly, theft can be detected quickly. How can theft be detected? They are always keeping track of their inventory. So, for example, you know that there are 90 shirts remaining. If they had 89 shirts remaining, they'll know that one shirt is remaining, because they'll need one shirt in order to have 90 that are remaining, provided that they sold 10 shirts. Okay, so if somebody were to steal a few t-shirts, they would know that some of them are missing. Thirdly, there's better inventory control, and lastly, accurate information is available at any time. That accurate information meaning the quantity of shirts that they have. So what are the disadvantages of the perpetual inventory system? Number one, it needs expensive computer systems. Why? Because they always have to keep track of their merchandise. It won't always be t-shirts. Sometimes it's things that are a bit complicated, so they need systems that can help them to always track their inventory. Secondly, they need staff training, and lastly, errors can affect records immediately. If they know that they have 90 shirts remaining, we said 100 minus 10, right? If, for example, the answer wasn't 90 and they said, let's say we have 85 shirts, you know that the other books that are related to their inventory would obviously not match, simply because they did not record their shirts well. So that is the perpetual inventory system. In conclusion, they always track their inventory every time something is bought or sold. And if you need access to these notes, please drop us an email. I'll share a PDF with you guys along with the checklist that I showed you. Now let's move to the periodic inventory system. Inventory records are updated only at the end of the accounting period. The business does not know the exact inventory value during the year. Remember, with the perpetual inventory system, we said that they calculate or keep track of their stock every time something is bought and sold. So the difference between this and the periodic is that under the periodic, they only update or check their inventory at the end of the accounting period. Before I even tell you guys the different points under the periodic inventory system, we can obviously tell that the business doesn't always know how much inventory it has, and they don't always know the value of the inventory, simply because they don't always check compared to the perpetual inventory system. So in simple terms, the business waits until year end and physically counts their inventory. Okay, so what are the advantages of the perpetual inventory system? Firstly, it's cheaper to operate, simply because they don't always have to calculate their inventory. So they don't have to spend a lot of money or time on systems as well as training people to calculate the inventory. And secondly, it's simpler to use. Now, what are the disadvantages of using the periodic inventory system? Remember, with the perpetual, they always check their calculations. And I said that if someone were to steal something or if theft were to take place, they'd find that out immediately, simply because they always check their stock. Here in the periodic inventory system, they don't always check their stock, so they'll never be able to know how much stock they have. So we could say theft may not be detected quickly. Secondly, inventory information may be outdated because they don't always check. And lastly, there is less effective control. Again, please send us an email so that I can share the notes with you guys. So what are the differences between the perpetual and periodic inventory systems? With the perpetual, the information is updated continuously. There's better control. It's more accurate as they always know the quantity of the inventory. However, it's more expensive. Why? Because they always have to calculate their stock. And as I said, they need expensive systems. What about the periodic inventory system? It's updated at the period end. There's weaker control. It's less accurate as they don't always know the quantity of the inventory. And lastly, it's cheaper compared to the perpetual inventory system. So if you know the perpetual inventory system, just remember that it's the complete opposite of the periodic inventory system. And again, I know that under inventory, there'll be some calculations that you have to remember. And if you memorize your formulas, you'll be able to calculate. So let's just say that you probably don't remember some of the formulas. You could get some good marks in the theory part, where you have to differentiate or to explain different inventory systems as well as other topics. So when you write your accounting paper, try to be open-minded. I know that the figures can be a bit intimidating, but if you really focus and if you remember what you learned, then you will most probably remember everything under theory, as that's the easy part, and you could get a lot of marks from just the theory only. Now let's go to our checklist and update it. You guys know what inventory is. I didn't add this as a something that we need to check, but let's just check inventory definition, then explain the cooperation characteristics of perpetual inventory system. You guys know that the information that are included, but you may also refer to your textbook after you understand the information. If you directly check information from different study guides, for example, let's say the Mind the Gap study guide, you won't fully understand inventory or different topics there, simply because textbook answers are a bit complex in accounting. So watch my videos, let me explain and try to understand what different things mean. Then from there, you can attempt different points under your study guide. So your study method will basically be you watching the videos to understand the definition, then moving to your textbook so that you can see whether you can relate what you learned to that information or to add onto that information. Secondly, we have explained the core operational characteristics of the periodic inventory system. You guys know that. Distinguish between the perpetual and periodic systems. You guys know this. What's the following point? Calculate cost of sales. We haven't done that. Let's go back to our notes. Now let's move to inventory valuation methods. Before I even tell you all the subtopics, what is valuation? Valuation is to basically find the value of a certain asset. So we're doing inventory, that means calculating the value of our inventory. There are 3 different ways in grade 12. Firstly, we have the specific identification method. Secondly, we have the FIFO, and lastly, we have the weighted average. Now let's learn the specific identification method. Each item is identified separately, and it is used when items are unique and expensive. For example, cars, houses, jewelry, and artworks. Okay, so it's a specific identification method. It specifies different things. So that already should give you a hint of the definition, which is each item is identified separately. For example, if we have, let's say, let's use different cars. Let's say a BMW is worth 200,000 Rand, and let's say a Benz or a Mercedes is worth 250,000 Rand. If a Benz gets sold, then the exact cost is used, meaning they'll write 250,000 Rand in their financial statements. Okay, so they specify every single item. Now, what are the advantages of the specific identification method? Firstly, it is very accurate as they specify which item is sold or the value of a certain item. And secondly, actual cost is used. Therefore, things are very accurate. So remember that about the specific identification method. What are the disadvantages of this? Firstly, it is time consuming. And secondly, it is difficult for businesses with many items. Why is that so? Remember, we have to identify every single product, right? So if there are a lot of cars, they have to calculate the value or find the value of those exact cars. Okay, here we have BMWs and Benzes. So what if we had, let's say, 50 cars or 100 cars? They would have to accurately record every single car, and it is obviously, this will result in the valuation method being very difficult for different businesses. Let's move to the second inventory valuation method. We have the FIFO, which stands for first in, first out. What it basically means is that the oldest inventory purchased is sold first. Okay? Again, it basically means that the first inventory is the first to be sold. For example, if you have, let's say, we have units here and we have cost. Let's say we have 100 units, we have 100 units, and these ones cost 10 Rand and the other ones cost 12 Rand. Let's say we sell 120 units. Okay, so the first 100 units come from this first batch. Okay, and the next come from, let's say, this one. The first, we have 120 units. Okay, let's say the first 100 comes here and the other 20 comes from the second batch. The cost of sales will be, we get the first 100 here. Remember, we sold 120 units. So for the first 100, we'll say 100 times 10. We multiply it with this cost to get our cost of sales. Okay, so let's say cost of sales, we'll say 100 times 10, which is 1,000. So out of the 120 units that we sold, we subtracted 10. What are we left with? We're left with 20. If you're confused, it's basically 120 minus 100, which is 20. So we've already calculated the 100 units. We have to do the remaining 20 units. So we'll say 20 from here, the second batch, okay? 20 times, will it be 10 or 12? It'll be 12 because it comes from the first batch, okay? So we'll say 20 times 12, which is 240. And this is in rands. We calculated the cost of sales. So this will be 1,000 rand plus 240 rand, which is 1,240 rands. Okay. Again, let me remind you guys, first in, first out means the first inventory that we bought has to be the first one that's sold. So here we sold 120 units. Okay. The first 100 will be from this batch, the first one. If we had, for example, let's say 200 units here, we would just take the entire 100 units from the first 200. But in this case, we can only take out 100. Then we'll say 100 times 10, which is 1,000. Okay, we still have 20 units left because we took out 100. So we'll say 200 minus 100, which is 20. These are the units that we still have to calculate, provided that we made these sales. So we'll say 20 from here. We'll take out 20. 20 times 12, which is 240. That is your cost of sales. To find the cost of sales, you have to multiply your units and your cost. Okay? So we'll say 1,000 times 240, which is 1,240. Now, you've calculated the cost of sales. What if they ask you how much inventory is left? Let's say remaining inventory units. Let's find the remaining inventory units. Remember, in total we had 100 and 100, which is 200 units. We only sold 120. To find the remaining units, we'll say in total we had 200 minus the 120 that we sold, which is 80 units left. Now let's say find the value or calculate the value of the remaining units. We have 80 units left, right? So we'll say 80 times, do we say 10 or 12? We'll say 12 because remember it's the FIFO. We no longer have these units since we sold them. We're only left with this batch. We no longer have the first batch, we have the second batch. So that 80 is from the second batch. We have to multiply it with 12. So this will be 80 times 12, which is 960. So your closing inventory will be 960 rands. If you guys still don't understand this, please make sure that you rewatch this example. You might need to calculate FIFO in your exams, and I want you guys to be fully prepared. But then again, things don't always be this straightforward. In your exams, you might be given different figures as well as tables, and I know that the information might be confusing, but they'll tell you which information to refer to. Go to that information, look at the tables, relax. You probably have time in your exams. Just try to make sense of what is given to you. Look for the units, look for the cost. They might also give you the cost of sales. And from there, you just have to quote the figures. You might have to calculate the cost of sales. You know that you multiply the units with the cost. And if they talk about closing inventory, you'll just multiply the remaining units with the cost of sales, or the cost, to find the cost of sales. So that is what the FIFO inventory valuation method is used for. So there are different tricks in which they might give you in exams. I'm not 100% sure whether this will appear in your exam. However, just know that when price increases, FIFO causes firstly lower cost of sales, higher profit, and a higher closing inventory. This video is proudly brought to you by McDonald's. Download the McDonald's app today and start earning points every time you order your favorite meals. The more points you collect, the closer you get to exciting rewards like free burgers, desserts, drinks, and more. Simply order through the app, collect points, and redeem them for delicious treats once you've reached the required threshold. Get the McDonald's app now for more information and start enjoying rewards with every bite. Method, you have the weighted average. So the weighted average is inventory is valued using the average cost per unit. It's basically when you value inventory by using the average cost per unit. Instead of tracking batches or different items separately, all costs are averaged. Now, for example, if we have, let's say we have units here, we have cost. Let's say we have 100 units as a first batch, 100 units as a second batch. Cost, you have 10 for the first batch, then you have 12 for the second batch. What will be the total cost? The total cost will be 100 times 10, which is 1,000, right? This first batch times 10 will give you 1,000. We then have 100 times 12, which is 1,200, meaning this 100 times 12, the second batch. So the total cost will be 1,000 times 1,200, which is 2,200. So if they give you the units and the cost and they say calculate the total cost, this is what you'll do. You'll start with the first batch, 100 times 10, which is 1,000, then 100 times 12, which is 1,200. Then we'll say, excuse me, this was supposed to be a plus. So we'll say this 1,000 plus 1,200, which is 2,200. Now let's say you have a question that says calculate the average cost. Remember, we're in the weighted average where inventory is valued using the average cost per unit. So to calculate the average stock, we have to say total cost divided by total units. This is the method, but we'll do more examples as well as past question papers. So your total cost is 2,200 Rand divided by, what are your total units? You have 100 units in the first batch, 100 units in the second batch. So this will be 100 plus 100, which is 200. So your total units are 200. This will be 2,200 divided by 200 is 11. This will be 11 Rand per unit. So what if they say cost of sales if 120 units are sold? Remember, you calculated your average cost, which is 11 rands, right? We said total units, total cost divided by total units. So if 120 units are sold, we'll just say 120. This obviously comes from the first and the second batch as well. So we'll say 120 times our average cost, which is 11. Remember, in the specific identification method, or was it the FIFO, we took the first 100, multiplied, and we took the other 20 units, then multiplied with the 12. But in this case, we're doing the weighted average. You don't do so for every single unit. Instead, we're trying to find the average. So this is 120 times the average cost, okay, which is 1,320 as the cost of sales. So let's calculate the value of the remaining inventory. Remember, in the previous question, we sold 120 units, right? So the remaining units will be, in total, we had 100 and 100, which is 200 units. So we'll say 200 minus 120, which is 80 units remaining. You have to show this in our calculations. So let me just put this here. So we have 80 units that are remaining. We have to multiply this with our average cost, which is 11. So can you guys see that if your average cost isn't accurate, all your information will be wrong. So make sure that you find the proper average cost. We'll say 80 times 11, which is 880. This is your closing inventory. Now, what are the advantages of the weighted average? It's easier to use. Why? Instead of having to specify our batch with our cost and the other batch with our cost, you might have more batches as time goes on, as you deal with different items. So we'll have to pick and choose different batches, match them with our cost. In this case, we only calculated the weighting average, the average cost, and from here we multiplied everything with the average cost. So this one is definitely easier to use, and it also smoothes out price fluctuations. The disadvantages are that they do not reflect the actual flow of inventory. Remember, you don't actually know the exact value of your inventory, you're just finding the average. And that is all under inventory valuation methods. I'll see you guys in the second video where we do cost of sales, sales, gross profit, and more. I'll also do more examples under inventory valuation methods.